The low that we saw at like 17.5 was the equivalent of 2018 when we were down here. And basically what we're working on is this portion of the bounce here, right? And so we're getting this bounce. It's a little flatter, but nonetheless. And then I think what you'll see is you're going to see Bitcoin kind of do this sideways chop for a period of time. And then eventually it's going to roll over, right? Not quite yet, but so we're getting close to first support, right? I got first support at 85. You should get some sort of bounce there. I think you don't have a ton more downside. You know, I'm really thinking by midterms, maybe around 77, 76 down here. One of my theses is that we had the midterms in November, and I'm like, there's no way they're letting oil stay up at like $125, $130 going into the midterms, right? Yeah. So now magically it starts to fall. Now, granted, is it likely that we're getting into a recession? Yes. I mean, that obviously hits demand on the demand side, which brings down oil as well. But yeah, I think again, you got maybe down to 76, 77 bucks before the midterms, and then you probably get a big bounce after the midterms, right? Once the midterms are over, let's run up oil. Yeah, so the last Fed meeting, we had a monster rally afterwards. And the basics of it was that the Fed seemed to be more dovish, and when you use the term dovish, it basically means they're less likely to raise interest rates. They're being nicer to the market, the market loves free money, right? I mean, who doesn't love free money? Until unfortunately it makes your money that you own worthless. But but the market's bottom line love that free money. So after the last Fed meeting, the market said, "Oh, the Fed wasn't as crazy, so let's rally because it seems like they're not going to hike rates as much." Now, today we got a jobs number that was like 500,000 new jobs created, and the markets are like, oh, wait a minute. If the jobs market is this strong, maybe the Fed is going to still hike in September, which is their next meeting. And so the markets are seeing a sell-off today. Now, let me just show you something cool. So you want to see how, and listen, over the last couple of days, I was shorting the stock market, and I'm going to show you why. And I love charts. You know me, man. I just everything is charts. Number one, look at this channel, right? So you had basically the Nasdaq. This is the Nasdaq chart, and you hit the high of the line here, and you pulled back to the low. Went up here, pulled back to the lows, and then look, you just pierced the high. And so you might say, okay, well that's interesting. That's just one. But then look at this. What if we drop a line directly down, connecting the high here? This is basically the all-time high to that pivot, and look at what we hit. So this is, I mean, so basically we're falling today. The Nasdaq's down 1.3%, and this, you could have looked at this chart before the jobs number, and this is what I did, and say, I have no clue what the jobs number is going to be, but the probabilities are that you're going to see a sell-off in the markets because you're into two trend lines right there. And sure enough, boom, sell-off. So I mean, again, for those of you out there, a lot of people are like, oh, how do the charts predict the news? They don't know what the news is going to be, but the charts, weirdly enough, do tell you the direction of the market move after the... Yeah, so, and that's what I think, honestly, I think that's kind of where we are on Bitcoin, is where I think the low that we saw at like 17.5 was the equivalent of 2018 when we were down here. And basically what we're working on is this portion of the bounce here, right? And so we're getting this bounce. It's a little flatter, but nonetheless. And then I think what you'll see is you're going to see Bitcoin kind of do this sideways chop for a period of time, and then eventually it's going to roll over, right? So if we go here, and let me just bring the chart over. So again, notice all this sideways chop, and if we put a trend line in, you can see connecting all these lows. I agree. I mean, back then, I mean, this was just one of those things where there was less and less interest, and then finally when you broke, and you're right, you talked about 4 and 5 times, right? And this is actually something that I really do teach as well. You have 1, you have 2, you have 3, you have 4, 4, and then 5, and then it breaks, right? So once you get to 4, you got to be on kind of that like, holy cow, this could break, and then by 5, it's usually breaking a trend line. So I always love saying how chart, like, resistance or support is like a locked door in front of you, right? So let's say I come up to a door, it's locked, and my kitten's on the other side, and there's a fire in the house, and I'm like, dude, I gotta save my kitten. So I run at that door, but it's locked, and I hit it as hard as I can. Chances are, you know, unless you're a massively strong dude, you're probably not breaking that door down on the first hit. It's probably going to take you a couple times of ramming it before that door gives way. That's support or resistance. So you have to ram it once, you ram it twice, you ram it 3 times. Probably by 4, 5, or 6 times, that thing's going to give way. And that's the kicker, right? Is that people tend to put a lot of indicators on their chart, and then they get that paralysis by analysis. Now, there are experts that use indicators. I don't show a lot of stuff, but number one, I'm paying attention to market psychology. I'm paying attention to emotion. I analyze Twitter all the time. That's one of the best indicators for a trade is when you post something on Twitter, and you have to have a big following like you or me, but you post something, if people are hating on it, chances are, I would say 80% chance you're going to be right. 80% right. And just going back to the indicators, like for me, everything in this chart that you're looking at, this tells me everything I need to know. Like candlesticks, I can look at a single candlestick, like right here, and that's telling me what I need to know. I can draw a trend line in and tells me exactly. Essentially, the chart is like a foreign, imagine you pick up a book and it's in some foreign language you don't know. Once you learn what each candle that's made in the chart means something. Once you learn the ones that are the most significant, it's like as if you learned that foreign language and now you're reading a book that you understand, but it's just in chart form. And it's absolutely amazing how you kind of can get to that level of not needing a bunch of indicators. Now, I do use Fibonacci. I like Fibonacci. I think that's an important one. Moving averages, occasionally I do use, although I will say I don't use like the smaller moving averages. I'm focused on like the 100, 150, 200 mostly. But for the most part, the beauty of it is, everything you need to know is right in this chart. And that's why I've been as successful as I can, is because, or as I have. Yeah, so what I'm guessing is going to happen is that I think you still have a little bit more of this sideways action, and then what I'm thinking is you're going to have one attempt by the Bitcoin market to really break up a little bit, and I have a couple targets. So number one, this is the Terra Luna low. I think at least we got to touch that, right? That's around 25,500. So I think you at least make one push up there. Small chance that to lure in enough bulls, they're going to try to take us to this 28 to 30,000 level. But ultimately, again, the kicker is that this is all inside bearish action within this bigger move, and you have a measured move. And this is you don't have to, once you understand the charts, you don't need indicators, right? Or at least I don't. So basically you have this high pivot to this low pivot right down here. That's a certain distance. And what you do is you look for what's called a measured move, where you had this consolidation here, all right? And then you take that high and you extend the same distance. So you take this distance and you extend it from that high. And to me, I have a target that gives me a target right around 12,000, give or take. And what's interesting about that target is it's basically that 85% correction on Bitcoin that we've seen pretty much in every bear cycle. And by the way, I know you know this, but remember when we were at 69 and everyone's like, this time is different. It's, all these different things. And it's like, nah, dude. Cycles are so much more powerful than we give them credit for. It's just like, they're going to play out. It is